Hello, Adam from the Mortgage Hub.
Hello.
It's a hot one today, and I have some hot questions for you.
It's a hot one, mate. No ties to that.
I'm looking for a property and also haven't secured a mortgage deal yet.
Yeah.
What happens if the Bank of England changes the base rates?
So the Bank of England, when they change interest rates, that will only have a real impact on the mortgage if you've got a tracker mortgage. And we've talked about that in a previous chat that we had. The tracker mortgage, it's linked to the Bank of England base rate, so it goes up or down in line with any base rate movements there. When people ask me the question, say, the base rates change, how's that going to impact my mortgage? I haven't yet secured a mortgage yet. Well, the honest answer is it doesn't really have any impact on that at all at that stage. You see, the mortgage rates that are available today are often based on sentiment as to what might happen over the next few months or even years. And the sentiment is based on the international markets, investments. There's a lot of other things that come into play when looking at mortgage rates. Just as an example, if we rewind back to February this year, there was the economy was doing fine, inflation was under control, and the expectation in the markets was that the Bank of England base rate would probably come down a couple of times this year. So if you like, they're betting on the fact that interest rates may come down. And so mortgage rates were linked to that. Then in the end of February, there's a little bit of turmoil in the Middle East, okay? And that has an impact then on the international markets, and how the UK economy might cope with those changes. And so it was then believed that this might impact inflation because the gas, electric, the oil prices were coming up. The cost of living would therefore go up. So there might be inflation. And so to combat inflation, the Bank of England generally looks at increasing interest rates. So all of a sudden, we'd gone from potentially feeling that there'd be 2 interest rate reductions to, actually rates might need to go up this year. And so all of a sudden, the lenders were withdrawing interest rates and putting them up because the cost of them obtaining the money on the international markets had suddenly increased overnight. Okay. So that tends to be what influences it. So really, it's what the investors feel might happen in the market and what might happen to the Bank of England rate that influences the rates that are available today for us, not the actual decision from the Bank of England. So if you want to know a little bit more about that, we always keep our eyes on what happens in the markets. We keep our eyes on what we call the swap rates, which is what governs sort of the price of mortgage deals. We keep our eyes on those. In fact, when the news came out, when there was the turmoil in the Middle East, we got very proactive here at the Mortgage Hub and we contacted as many customers whose mortgage deals were coming up for renewal. And we did over 50 remortgages that month compared to a normal average of about 24, 25 a month. So we did double the number of remortgages because we knew that clients' interest rates were actually going to go up. And if we didn't secure those mortgages sooner rather than later, it was going to be more expensive. So we do want to take care of our clients. We do want to look after everybody. We'll keep our eye on things for you. If you've got any other questions or any other issues, then just give us a call. The advice is free. It's 0121 323 4999.
Thank you, Adam.